I'm Shashank Kanodia, tracking automobile and auto ancillary space at ICICIdirect Research.
My name is Samir Paradikar, Lead Analyst Information Technology at ICICIdirect. Today I'm going to talk about Diwali Peak 2022. My Diwali Peak for 2022 is Coforge Limited. But before I talk about my pick, we'll take you some of the emerging trends in the IT sector. Just to give you a background, if you look at the tech spending of the clients globally, after the first year of pandemic, as well as during the pandemic, the demand accelerated as clients realized tech spending is very crucial for the business survival. In the long run, the clients have continued to spend in the areas of cloud transformation, business transformation, etc. This space is further accelerated in the second year as the clients continue to spend on revenue maximization as the cost optimization programs. Now in CY23, we will witness the accelerated business decisions shifting into regular business decisions. The companies will continue to report a strong growth as the deal momentum continue to be strong. One of the noticeable trend in the IT results in QY23 and as well as in Q223 is the moderation of the attrition. So we have seen the demand supply mismatch, which was on a higher side maybe in the past, has narrowed further. So the company are looking at cost structures more closely, and endeavor is to improvement of margins going ahead. So we believe moderation of attrition, moderation of subcontractor cost, pyramid optimization, pricing will be the one of the levers of margin improvement going forward. Now, coming back to my Coforge Limited as my topic. Coforge is a global digital services and solutions provider with a deep expertise in select industry verticals. Coforge differentiated value proposition is led by robust and growing capabilities in product engineering, customer experience, digital solutions, AI/ML, business processes, and etc. The company has a presence in 21 countries with 25 delivery centers across 9 countries and more than 22,500 technology and process experts. Coforge has a well-diversified portfolio as BFS, insurance, travel and transportation, they're normally called a TTH, and other verticals from 29.5%, 23%, 19%, and 28% of the revenue mix respectively. Geography-wise, North America forms 51% of the revenue mix, while EMEA and ROW forms 36% and 19% of the revenue respectively. Coforge has guided for at least 20% constant currency revenue growth for FY23, which is even stronger than the Infosys and HCLTech revenue guidance. This is backed by continued strong deal wins. It won 11 large deals in FY22 with larger deal of $105 million in BFSI space as well as $350 million deals. We believe this provides a revenue momentum going forward. The revenue for TTH vertical, specific to travel, has started accelerating, and it is now even better than pre-COVID levels. And the company expects the further growth in this vertical to be driven by contactless solution across airports, cloud transformation, and automation. On the people front, it reported one of the lowest attrition in the industry. So Coforge attrition is even lower than the TCS. Coforge does not expect it to increase materially from here on. We are estimating 19.9% revenue CAGR over FY22 to 24 and 220 basis point margin expansion. Basically, continued focus on offshoring will drive the margin expansion going forward. We value Coforge at 25 times FY24 EPS, and our target price is 4,375 rupees per share. Thank you.
Our top picks for Diwali 2022 are Eicher Motors and Apollo Tyres. Now, first talking about Eicher Motors, it's an auto OEM with a market cap of roughly 96,000 odd crores. The company is a leader in the premium motorcycle segment domestically, that is greater than 250cc segment, with an aspirational brand under Royal Enfield purview, with top models being Classic, Hunter, Interceptor, amongst others. The company also has a presence in the commercial vehicle space through its joint venture with Volvo, that is VCV, and thus is a beneficiary of the cyclical upswing in the domestic CV space domestically. It has strong net cash positive balance sheet and realizes healthy 20% plus return ratios. We have turned positive on Eicher Motors, tracking its affordable offering in the premium motorcycle segment, that is Hunter 350, which substantially increases its addressable market size. The domestic addressable market size is pegged at roughly 32 lakh odd units, which is 5 to 6 times of its domestic sales clocked in last fiscal year, while its international addressable market size is pegged at roughly 10 lakh odd units. We expect with Hunter 350 launch, the company to clock roughly 25% sales volume CAGR under the Royal Enfield brand. Even the recent volume prints by the company in the month of September were encouraging, bringing the company clock roughly 82,000 odd units, which was up 17% on month-on-month basis. With operating leverage gains and decline in key raw metal prices, namely metals as well as plastics, we expect the company to clock roughly 26% EBITDA margins by FY24, with consequent ROC placed at 21%. We have a buy rating on the stock with a target price of roughly 4170, wherein we valued the company on SOTP basis and Royal Enfield franchise at roughly 34 times price to earning on FY24 numbers. A second pick from the auto ancillary space is Polo Tires. Is it Autobank with a market cap of roughly 17,600 crores. The company is a leading tire manufacturer with operations based out of India as well as Europe. India constitutes roughly 67% of its sales, where Europe contributes roughly 51%. In India, it stands to gain from the cyclical upswing in the domestic CV space, as well as double-digit growth being witnessed in the domestic passenger vehicle segment. It has prominent presence in the truck bus radial as well as passenger car space. Internationally, with turnaround in the space at its European operations, the company on a consistent basis is been clocking roughly high double-digit EBITDA margins, the share of value-added products on a continuous rise. The company also stands to gain from the recent correction in key raw material prices, that is natural rubber and food derivatives, which are down roughly 15 to 20% from their recent highs, and they together constitute roughly 65 to 70% of its raw material basket. With a target to achieve $5 billion of revenues by FY26, EBITDA margins in excess of 15%, and ROC in the range of 12 to 16%, the company is currently focusing upon sweating of assets, consequent controlled capex spend, as well as free cash flow FCF generation. We have a buy rating on the stock with a target price of 335, when we have valued the company at roughly 6x EV to EBITDA on FY24 numbers. On behalf of ICICI Securities, we wish you and your family a very happy Diwali 2022.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.